This video is for you if you think that electric cars have a lot of potential and that sustainable transportation is the way of the future. Despite recent setbacks and a decline in the stock market, one well-known Tesla analyst and shareholder is still hopeful about the company's future. Many of us Tesla stockholders who believe in tech god Elon and his mission to permanently revolutionize sustainability and transportation share this man's opinions. Come along as we examine James Stephenson's observations and the reasons behind his Tesla stock is poised to rise. So fasten your seatbelts and prepare to be motivated by the industry's potential for expansion and financial success. Why do you think Tesla's stock will soar before we go there? Hit the like button and subscribe. Stephenson James. There are still a lot of bulls out there who are optimistic about the future of the leading EV manufacturer in the market, even though Tesla's stock has performed extremely volatilely over the past year. On January 16th, James Stephenson, a notable member of the Tesla Twitter community and shareholder, as well as a Tesla analyst, posted a lengthy thread expressing his optimism for the 2023 Tesla line. According to Stephenson, naysayers would believe that Tesla's recent steep price cuts will eliminate the company's prospects of experiencing profit growth in 2023. Even though I hate to say it, 2023 earnings and recorded deliveries are still being received. He then responded to the Twitter thread with a string of tweets that included figures and an explanation of his viewpoint, stating that Tesla's falling delivery speed in Q3 and Q4 felt like it fell short of analyst forecasts. Tesla deliveries will continue to shatter quarterly records thanks to the recent price reductions. According to Stephenson, the Tesla Model 3 and Model Y are the best-selling luxury cars worldwide. He also claims that sales of the former are increasing, albeit more slowly than those of the latter, and that by the end of 2022, weekly production of Tesla vehicles will surpass 3,000 at the company's two recently opened factories. Growth in profits. As shipping and inventory levels continue to rise and the average cost per car delivered rises, Stephenson's subsequent tweet included a graphic that illustrated production and delivery data related to the aforementioned chart, demonstrating that the Austin and Berlin plants have significantly increased production since they began operating capacity from the middle of 2022 through 2023. In a conference, Stephenson stated that Tesla's analysts predict that production will surpass deliveries, and that profit growth is the most crucial element for investors to take into account when considering profitability. Elon Musk, the CEO of Tesla, stated that by the end of 2023, fully autonomous vehicles might be made available to eligible vehicles. Martin Vika, Tesla's head of investor relations, stated that the business was on schedule to release supervised FSD by Musk's anticipated date. According to my prediction, Tesla will increase its profits over the coming years by making fully autonomous driving so alluring that more customers would eventually pay a higher price for it. According to Vika, supervised FSD is simply another term for supervised autonomy, meaning that the driver still contributes significantly to the vehicle's mobility in a mainly hands-off role. Even if Tesla introduces completely autonomous driving technology to the general public, drivers must remain alert and follow safe driving practices, as demonstrated by FSD beta program participants who abuse their advanced driver assist systems even as the year draws to a close. We have a strong belief that Tesla will keep improving its self-driving technology as it collects more data through interventions, meaning the company learns more from drivers who actively correct full self-maneuvers. Vita stated that anyone using FSD while driving would be banned from using the service altogether. We are following this course because we think that the issue of universal autonomy can only be resolved by massive data collection and artificial intelligence. I predict that Tesla Energy will enjoy significant revenue increase for Megapack XL as the new factory ramps up in 2023 and incentives kick in, as Vika stated in yet another chart in the previously referenced Stephenson Twitter thread. Stephenson expects significant revenue growth from the Tesla Megapack, which stores energy for the grid safely and reliably, removing the need for gas peaker plants and helping to prevent outages. According to Tesla's Q3 earnings calling in October, the company's energy business has made notable progress in 2022 despite economic uncertainties. Each unit can store over 3 megawatt hours of energy, which is enough to power an average of 3,600 homes for an hour. Storage of energy. Tesla CEO Elon Musk has said that the business anticipates stationary energy storage to grow by 150 to 200% a year, which is much faster than the auto sector. Installing solar panels, solar roofing, and stationary energy storage devices like Powerwalls and Megapacks are the areas of expertise for Tesla Energy. The corporation announced in its letter to shareholders that the deployment of energy storage reached a new quarterly high of 2.1 gigawatts last quarter. Despite semiconductor issues continuing to have a bigger impact on their energy business than their automotive business, and the fact that demand for their storage products is still higher than their capacity to supply them. DESA reported that their energy storage deployments increased by 62% year over year in Q3 to 2.1 gigawatt hours, the highest level they have ever achieved. Stevenson asserts that Tesla's strategic pricing in 2023 cuts will limit the growth of earnings per delivery, but earnings dollars will increase as a result of higher deliveries. He also explained why profits per delivery aren't declining further in Berlin and Austin, where plants are expanding, resulting in cheaper delivery costs. The highest cost per truck is in Fremont, which is contributing a decreasing amount to the worldwide mix. Money. It gets harder to deliver every vehicle by the end of each quarter, and another figure the more vehicles you produce each week. Stevenson provided examples of how the waves affected Tesla's quarterly finished goods inventories despite a decline in revenue per vehicle in 2021 and 2022. Stevenson notes that Tesla's automotive gross margin, excluding regulatory credits, improved in projects that revenue would increase during 2023 even though Q4 will show the fall. The Tesla analyst provided a more thorough graphic that demonstrated the growth of Tesla's revenue over time, with Q4 revenue reaching an all-time high of nearly $25 billion more in 2019 than in the previous year. In another tweet, he stated that the fourth quarter of 2021 had a special payroll tax of $340 million connected to Elon Musk's 2012 stock compensation exercise. He also stated that some Tesla believers believe the company's operating expense numbers are inflated because they haven't increased enough, but that is primarily the result of CEO stock compensation. Several analysts are certain that Tesla stock is the best bet for 2023, and Stevenson's Twitter thread continues with more graphics that illustrate his forecast in a more thorough series of representations of Tesla's deliveries, revenues, and earnings following its worst year ever. Equity researcher Benjamin Callaway lowered his prediction price for Tesla stock from $316 to $252. Kilo then marketed Tesla as the top concept stock for analysts in 2023 before 6 analysts lowered their price goals. Despite this, analysts have kept their buy and outperform ratings on Tesla stock, and their objectives are still significantly higher than the stock's current price level. According to the analyst, Tesla can boost demand for its products in a number of ways, including rental agreements and accelerated bonuses. Callow contended that investors shouldn't be overly concerned about the slow demand at the beginning of 2023 because Tesla is in the best position to benefit from the expanding market share of electric vehicles, with Bush analyst Market Bard has joined Dan Ives, who has long been an artist and backer of Tesla stock, in his optimism for the EV. Powerhouse analysts have suggested that Elon Musk's use of Twitter to communicate with people from all walks of life and make political statements is hurting Tesla investors. Tesla bulls have recently expressed their disapproval of Musk's use of Twitter, claiming that it has been a soap opera that is harming Musk's and Tesla's brands. It would be easy for us and other bulls to give up and consider the short-term challenges as 2 obstacles to overcome for the stock to function in 2023, but Ives is still optimistic. In addition, the analyst applied this stock has bottomed in our opinion and works from here have produced Musk returns. Last week, Ives lowered his price target for Tesla stock from $250 to $175 while keeping his outperform rating. He pays attention to Tesla and stops selling the company's stock. Ives hasn't explicitly stated that more than 70% of the recent Tesla stock sell-off is due to the street's reaction to Musk and Twitter, but he added that it's still too early in the year to make any meaningful predictions, so Tesla stock is still one to watch. If you want to receive more updates about the price of Tesla stock, we strongly advise that you subscribe to this channel. If you enjoy this video, hit the like button, and I'll see you on the next one.